we saw yesterday, and we played extended versions of this, Andrew Houser, the Deputy Governor, who's come from the Bank of England, who effectively has said, hey, listen, this is the reality of the way in which the world sits in Australia. You can't basically continue to have everything that you wish for. And also, by the way, it seems as though economics is more of a sport in Australia than cricket seems to be, because it makes the front page more. I then see a response today from the former Communications and Senior Labor Minister Stephen Conroy on this network here, where he's called Andrew Houser a wanker, which he then translated to British, saying that's a tosser. And then let's just pick up a little of what he had to say. Have a listen.
They went too far last year in putting their rates up, and they're too slow to bring them down because they're going to put this economy into recession, just like Houser did in the UK. Interest rates too high, economy in recession. The interest rates are a blunt instrument that are not addressing the causes of inflation. They are punishing those who can least afford to be punished.
So there's another senior Labor figure, jawboning the RBA, effectively trying to teach them economics. So does Andrew Houser need to be taught economics, do you think?
To be honest with you, and I apply this to Australia and I apply it to the UK, where the Bank of England are based, both the government and the central bank need to relearn economics. I don't think either of them have got it right for a multitude of different reasons. If you had interest rates right now, and by the way, real interest rates here are still quite low.
Yes.
If you had interest rates back at 0 or 0.1 where they were, where do you think inflation would be right now?
Well, it'd be right through the roof. Of course it would be.
Exactly. Equally, if you had interest rates at 6%, things would be worse off. Neither of them are doing anything about addressing productivity. So the government is wrong to just try and pass the buck to the RBA. The RBA is wrong to just say, well, nothing we can do, productivity, etc. They need to be looking at it too, to an extent. But I think you actually need a more integrated approach where, heaven forfend, you actually need the government and the RBA working together to understand what's the big picture we're trying to achieve.
But isn't that dangerous, given the fact that Donald Trump on the weekend, on Friday night or Thursday night, basically came out and said, well, I think maybe the president should have a role in setting interest rates. JD Vance, his vice president, came out and said, yeah, sure, it's a political decision. But that goes against the grain of everything we hear, that the Reserve Bank should be independent.
Well, we only got central bank independence a couple of decades ago. Prior to that, it was presidents who basically lent on the Fed or set interest rates such as they were, directly or indirectly. And the concept of an independent central bank is still pretty new in history. And you have to ask yourself, when you look at these central banks right the way around the world, don't just mean Australia, have any of them covered themselves in glory over the past couple of decades? Look at the Bank of Japan just the other day, raising interest rates by 15 basis points when people didn't expect it and saying, we've got a lot more in the tank, blowing up the entire global financial market. Now, don't tell me that they're doing a good job doing that, because clearly they're not. Now, a government doing a good job? No, neither of them are, and they both need to rethink things urgently, in my book.
So, OK, the central banks need to look at themselves and look at their performance. And let's be honest, there is a bit of a me too and follow the leader around the world in terms of the Federal Reserve. But it seems that we go back to where we started. Jobs are the key right now if you are to have some sort of robustness in your economy longer term.
Jobs are the key. Think of them as being the fuel in the tank. Fair enough. You've got to keep that tank filled up with fuel to keep it going. But where do you want to go to? What kind of jobs? Being paid what? In what sectors? And this is the real issue. Central banks and governments keep focusing on GDP, and I'm sure everyone here, when it comes out, you talk about the GDP number. All those GDP numbers look at demand. No one looks at supply. What are you or aren't you making? What sectors are you in? Is it a good sector or a bad sector? These are the kind of questions you need to look at if you want to get productivity up.
Tell you what, Michael Every, good to have you in the program. We'll do it again very shortly. Thanks for your time.
Thank you.